What if I told you that $1,000, right now, today, has the power to change the entire trajectory of your financial life? Not in a get-rich-quick way, not through luck or crypto gambling, but through a proven, time-tested system that has quietly built more millionaires than any lottery, any business idea, or any side hustle combined. The problem is, nobody teaches you this in school. Whether you are in Singapore, the United States, Nigeria, Germany, or Brazil, the rules of wealth building are the same. And today, we are going to break all of them down, simply, clearly, and practically. Stay with me for the next 10 minutes, because by the end of this video, you will know exactly where to put your first $1,000 and why. Before we dive in, let's address the most common thought running through your mind right now. $1,000 is not enough to make a real difference. Here is the truth. A single $1,000 invested at age 25, with zero additional contributions, grows to over $88,000 by the time you are 65, assuming a 12% average annual return. That is the historic long-term average of the S&P 500, the world's most tracked stock market index. Now imagine if you invested $1,000 every year, or every month. The numbers become extraordinary. This is not magic, this is compound interest. Albert Einstein reportedly called it the eighth wonder of the world. And once you understand it, you will never look at money the same way again. So no, $1,000 is not too small. $1,000 is exactly where every great wealth story begins. Now, before we talk about where to invest your $1,000, there is one non-negotiable rule. Only invest money you will not need for at least 3 to 5 years. Here is why this matters. Markets go up, markets go down. In 2020, the S&P 500 dropped 34% in 33 days. But investors who stayed calm and stayed invested, they saw a 100% recovery and more within 12 months. The investors who panicked and sold, they locked in their losses permanently. So before you invest a single dollar, ask yourself 3 questions. 1. Do I have at least 1 to 3 months of living expenses saved as an emergency fund? If not, build that first. Your emergency fund is not an investment, it is financial body armor. 2. Do I have high-interest debt, credit cards, payday loans, above 15% interest? If yes, pay that off first. Paying off 20% debt is a guaranteed 20% return. Nothing beats that. 3. Is this money I can leave untouched for 3 years minimum? If yes, you are ready. Let's invest, all right? Let us get into the 5 best ways to invest your first $1,000 in 2026, ranked from lowest to higher risk, with global options for every country. Let me now give you a concrete, step-by-step action plan. Not theory, not someday, right now. Step 1. Open a brokerage account today. If you are in the US, Fidelity or Schwab, both free, no minimums. If you are in Asia, Interactive Brokers, Tiger Brokers, or Moomoo. If you are in Europe, Trading 212 or Jurio. If you are in the Middle East or Africa, Interactive Brokers remains the most globally accessible. Step 2. Fund with $1,000. Transfer from your bank. Most platforms confirm within 1 to 3 business days. Step 3. Buy one ETF. Do not overthink this. Buy VOO or IVV, the S&P 500. One purchase, done. You now own a piece of 500 of the world's most powerful companies. Step 4. Set up automatic contributions. Even $50 or $100 per month, automatically invested, is more powerful than a one-time lump sum. This is called dollar cost averaging, and it removes all emotion from investing. Step 5. Do not touch it. No checking every day. No panic selling on red days. Set a calendar reminder to review your portfolio every 6 months. That is it. That is the strategy. Wealth is not built in a day. It is built in decades. And the single most important variable is not how much you invest. It is when you start. The best time to start was 10 years ago. The second best time is today. Before I let you go, 3 critical mistakes that destroy beginner investors and how to avoid every single one. Mistake 1. Trying to time the market. Nobody, not hedge fund managers, not AI systems, not anyone, can consistently predict market peaks and bottoms. The solution? Time in the market always beats timing of the market. Stay invested, always. Mistake 2. Chasing trends and hype. In 2021, meme stocks like GameStop made headlines. The people who bought at the peak, many are still waiting to break even. Ignore the noise, stick to your plan. Mistake 3. Investing without a goal. Are you investing for retirement in 30 years? A house deposit in 5 years? Financial independence in 15? Your goal determines your strategy. Write it down, make it specific, let it guide every decision. Here is what I want you to remember. $1,000 is not just $1,000. It is a decision. A decision to say, my financial future matters, and I am taking control of it today. No one is coming to save you financially, but with knowledge, consistency, and time, you can absolutely build the life you deserve. If this video gave you clarity, give it a like. It genuinely helps more people around the world find this information. And if you want to go deeper, subscribe to WealthWise AI. Every week we publish videos on investing, AI tools, and building wealth for a global audience without the jargon. I will see you in the next one.